Okay, I just wanted to make sure that this was recording here. Um, and now let me share my screen again with you. Okay, here we go. So the way this session is going to work today is I'm going to do a quick brief overview of the Small Business Development Center and what we do across the state of Pennsylvania and across the country. And also then jump into what we call a tax tip. And our tax tip today is talking about a free bookkeeping spreadsheet that our SBDC at our local center here at PennWest Clarion created, and we share it with people. So you may be interested in learning about this spreadsheet for bookkeeping, and you may be interested in using it. And if so, I will be giving you my email address here shortly in the chat so that you can send an email to me requesting me to email this bookkeeping spreadsheet to you. So a little bit about the SBDC. What you'll see here is that there are 15 centers across the state of Pennsylvania, us being number 7 on this map. But no matter where you're located at in the state of Pennsylvania, there is an SBDC. And often, as I'm answering questions throughout the remainder of this session after the tax tip that I'm going to give you, um, I often refer you to reach out to your local SBDC consultant first, and then if you cannot get the answer, then come back to me at my center. Since my background is accounting and taxes, I can normally answer your questions. However, your local SBDC consultant oftentimes can answer those questions as well. Our SBDC services are offered to you at no charge. The way that it's offered to you at no charge is what you see at the bottom of this PowerPoint presentation. You'll see that we're funded by the federal government, which is through the SBA, through the state, it's the DCED, through the PrEP program, and then also through each one of the universities or colleges that we happen to be located in. Now, if you're located within our 10 county territory, you'll see pictures here of our staff and our business consultants. But overall, take the pictures away, and the rest of this holds true across the state of Pennsylvania. Everything's offered at no charge. What we learn about you is confidential. Our training that we offer, almost all of it's offered at no charge, like the webinars and the seminars. However, there are a few for which there is a fee for, but you always know about it. And of course, you're never required to go to any of those trainings. They're open to the whole world to attend. The PowerPoint slide or the links at the bottom down here are links to the website. So if you want to write this down, because there's no here in a moment, there's not going to be any more PowerPoint slides. So I'm not going to email you any slides from this. But you can write this down, pasbdc.org. If you go to that one right there, that particular website has all of the trainings offered by the SBDCs across the state of Pennsylvania. That's pasbdc.org. In addition to our general business consulting that we offer to help entrepreneurs start businesses and to help existing businesses with any questions that they have, we also have some special programs that are still offered at no charge as well. So you can take a look at that pie chart there. Anything from inventing a new product to selling to the government, also selling international, which includes Canada and Mexico. Many businesses have to comply with environmental regulations, and so we have a special program just for that that is very popular. When you're looking to open a business, or if you already own a business, you're like, am I missing anything? Is there some sort of environmental regulation I have to comply with? That's where our environmental program helps. And then also workforce training, as you see on the left-hand side of that pie chart. If you are in manufacturing and some other industries, and you have employees that need any type of training almost, then you might be eligible for some grant dollars through the government. So it would be worth checking into this. I think it's like $2,000 per employee, somewhere around there. It's definitely worth reaching into this grant money if you do any kind of training that costs you money, either in-house or you send them away. This works for all types of trainings. The SBDC, this is probably the most popular slide. I just want you to take a glance at it. And if you see something there that interests you, you'll want to reach out to your local business consultant at your local SBDC because we offer a lot of different services, as you'll see on this bubble. No matter whether you're just in that introduction stage of just getting your business up and running, or whether you're a very mature business and you've been open for 100 years, we can still help you. And if you're thinking about like, well, what about the size? Can you only help a certain size of business? Yeah, that is true. As long as you have less than 500 employees. So, most businesses do fit into that under 500 employee number, their threshold. So anybody under that can utilize these services here. So I'll go ahead and move on. I just wanted you to take a quick glance at this, maybe write a note down, but reach out to your local SBDC consultant. Okay, and that is the end of that. Let me come back here now and let me see. I got a couple questions here. Okay, can I turn the chat on? Absolutely, because you know what? I always forget to do that, but you wonderful people are so kind as to remind me. So thank you. Let me bring that up here. Everyone and everyone. So the chat should be on. Okay. So now I'm going to take just the next few minutes to go over this spreadsheet with you. The idea is not to give you training and really dive in deep for an hour talking about it. I'm only going to glance over it for about less than 10 minutes. And then I'm going to open this session up to questions and answers. So what that means is if you have any kind of questions for me today, make sure you write them down so you don't forget about them. And you'll have an opportunity to unmute yourself and talk to me. Or if you don't have a microphone or you don't want to talk, use that chat or Q&A button, either one of them, and type your question in there so that I can try to answer that for you. So you can either go live with me or use the Q&A or use the chat. Any of those will work just fine. And so you could start chatting or Q&A while I'm even talking if you want to. Let me bring up this spreadsheet and let me share it with you. Okay, you should see it on your screen now. So we often have people telling us that they need some sort of bookkeeping software, they need somehow to keep track of their income and their expenses, but they're not sure how to. And then also we have other people that'll tell us that they've been looking into some of these bookkeeping software such as QuickBooks, and it's just getting really expensive. It's like a monthly fee and I have to pay it every month for the rest of my life, and it's getting to be expensive. And so we thought that we would try to help out our smallest of businesses that just need a more simple bookkeeping system, and something, of course, that wouldn't cost them anything as long as they have, like Microsoft Excel. And this is the spreadsheet that we created. So what you're going to see here as I show you this is there are many tabs at the bottom, and there's going to be green tabs, there's going to be red tabs, and there's going to be yellow tabs at the bottom. So as you see here in the very first tab that we're looking at, I got to move this out of the way. Yeah. The very first tab here says instructions. And there's a little bit of reading here just to give you an overview of what this spreadsheet does for you. And it shows you what each of the tabs are down at the bottom. That's what this green, yellow, and red is on these instructions. And just like with a stoplight, green means go. It means something that you can edit. Yellow means, well, there's some things you can edit, but there's some things that we've locked so that you can't edit it. That's mostly so that, it doesn't get messed up. We don't want the spreadsheet to get messed up. And then there's also red, which means don't touch it. You can look at it, but don't touch. Okay. And that's so again, so that different equations and formulas so that they don't get messed up, because they get messed up, it's really hard to fix. Next, we have our revenue tab. This is where you're going to keep track of your income for the year. And you have different columns up here across the top. You'll see date, month, what type of sale, and notice there's a drop-down menu. And then you have the description box. You can type anything in there that you want to. You can type in the dollar amount. And then depending on what you choose from the drop-down menu will depend on where it fills in over here on the right-hand side. If you do have returns or discounts or allowances, you can type that in as well. Those are like subtractions, right? So if you put that in there, then these equations here will do the proper calculation for you. And when I scroll down, this goes for a very long time. You might notice these numbers on the left-hand side just keep getting bigger and bigger. If you come over to the right-hand side, you will see that this is a really small button on the right because it goes down for a very long time. The next tab is cost of goods sold. So if you're a business that sells products, you have a cost of goods sold. And therefore, look at these different columns up here. You have your date, the type of cost of goods sold, such as materials, ingredients, merchandise, other, and shipping. And we can even help you customize these if that makes it more helpful for you. Also, your amount, your description, and then depending again on what you choose from the drop-down menu and how much you type in right here, it will flow over here automatically for you. Now, the reason we have these things flow over to the right-hand side is so that we can have a total down at the bottom because you're going to want a total at the end of the year. We also have operating expenses. So kind of the same thing, but I'll look at these different columns up here: accounting, legal, advertising, credit card processing, and it goes on and on for a while over to the right. Now, these different categories, we tried to use categories that you'll see on your tax return. And the reason for that is so that you, as you're categorizing your expenses, once you give this spreadsheet to your accountant, then the accountant will see words that they're familiar with seeing on the tax return. Then down at the bottom here, you have 3 tabs for car expenses. So some people, they need to keep track of their miles, right? Everyone needs to do that. But then some people want to use actual expenses versus the standard method or standard mileage. I'm not going to go into detail about that. That's something for a future conversation, but you'll notice those 3 tabs. Moving over to the right, you keep track of your asset purchases. Assets are anything that is expected to have a life more than 12 months. That's a fixed asset, or what we're just going to call an asset that we're tracking here. And you'll see from this drop-down menu, there are different assets that you can choose from. This is, the vague term. And then over to the right, you can be more detailed, type in exactly what it is. It's important to know for your accountant whether it's new or used, when you purchased it, and it's very important for your accountant to know when you sold it, or even when you just threw it away. That's what that column would be used for. If you're a sole proprietorship or a partnership or an LLC sole or an LLC partnership, you're going to take withdrawals from your business. And so that's what this particular tab is for. You then also have a couple tabs for home office expense. This one here explains the home office expense. And then there is a tab that you can go in and track your home office expenses. Similar to your expense tab, this is specific to the home office expense. Then we start getting into more red. Let me move this over here. Okay, I guess I'm all the way over. So your payroll info. Again, this is some reading for you to do so that you can become familiar with payroll for your own business if you're going to have employees someday. And then you have this red tab, which is the income statement. So everything that you're typing in the earlier tabs, from your revenue to your expenses, to your home office expenses, to even your assets, things like that may feed into this income statement tab. As you see down here, because I mentioned the assets, there is a little table for your total asset purchases and your total asset sales. This is a summary tab. Everything you put in earlier summarizes right here. Next, you have this taxes column, and notice that it was yellow, which means, okay, there's some things you can edit, some things that you do not touch. So where you see the yellow, those are the things that you can edit. And so, your local business consultant or if they don't want to, if they cannot help you with this, because maybe you don't have a consultant with a lot of accounting experience, they'll refer you either to someone within their office or they'll refer you to someone outside their office, like myself, who will be able to go through this with you and help you make edits to some of these yellow squares that you're not sure what to do with. But this helps you make your estimated quarterly payments to the federal government, the state government, and the local government. Last but not least, and I'm 2 minutes over, I'll be 3 minutes here in just a moment, is this last link, which is just a tab to give you some resources that you might find interesting to know more about. So the Small Business Administration, you'll see there it talks about, managing your business and paying taxes. The SBDC, there's all of our training webinars, our resources that we make available to the public, and then also, steps in hiring your first time employee. And of course, there's other ones down through here as well. Many of these are great websites. That's why we're sharing with you. They're definitely worth taking some time to look at. And then if you're a business that needs to charge sales tax, we've put this retailer's info button in here so that you can go down through the pamphlet and look at every product that you might be selling. And it tells you whether a product is taxable or non-taxable. So you'll see a whole bunch of products that are, a whole bunch of products that are not. That's what this retailer's information is for. So I know this was just a quick overview of our bookkeeping system. If you feel that this is something that you want to do, want to try using, then I am going to put my email in here right now for you. There you go. So you can email me and ask for this bookkeeping spreadsheet, and I will send it along to you once we are done with this Q&A session. Okay, next. What we're going to move in now for the next 40 minutes is open Q&A, anything dealing with business taxes or even in general, anything dealing with your business, because a lot of it does deal with taxes anyhow. So, what type of business structure should I be? That includes taxes also. So I like to try to answer any kind of business related questions that you have. I am a general business consultant with the accounting and tax experience. I've been with the SBDC for something like 20 years now. So I do bring some good experience to you. I do see here a question. Oh no, so she's sharing her information. If you see in the chat there that Cheryl is telling where she's from and providing a LinkedIn so that if you want to connect with her, feel free to. Okay, I don't see what there's Q&A. There we go. So Cheryl's also saying, I need to apply for SAM.gov, which requires the IRS to confirm my EIN and taxpayer number. I failed taxpayer name verification 5 times. SAM.gov help desk couldn't help. The IRS help center options either give me pre-recorded messages or hangs up on me. Any suggestions? Yes. Anymore, it's good luck getting through to the IRS, and it's only going to get worse. We've cut their budget multiple times. Not we, but the leaders of the country have cut their budgets multiple times. So it's seriously going to get worse over the next several years. So I'm not sure if you've been working with with a government consultant or not. So if you reach out to your local SBDC and if they know that you're doing this, I would think that they could connect you with one of their partners locally to be able to help you through this process. If you're from my region, the PennWest Clarion region, I could tell you who to reach out to. But if you're from outside of our SBDC region, PennWest Clarion SBDC region, then I'm not sure who you would reach out to. So I would try talking to your SBDC consultant to see if they can help you. And or if you already have, let me know that, and we'll try to take it to the next step there. Sometimes doing it yourself is hard, getting through to some of these people. So the best thing is to work with someone that specializes in this. I don't per se, but we do have partners that do. Okay, so next, let me see here. Let me bring up the list of people in attendance. I have a question in the chat, but I do want to give a chance to, why is this not coming? There we go. Yeah, I do apologize. Okay, Holly Warren, you're next in line here after Cheryl, so at least on my list. So Holly, do you happen to have any questions? Here. Okay. So I think you all have the ability to unmute yourself. If you don't, let me know. But Holly's not jumping on here, so she may not have a question or may have got interrupted at work. I understand how that works. Okay. So let me come back here to this to Katie. She has a question in here. She signed in a bit late. That's okay. Glad that you can make it. And your question is, when are business taxes due? So depends on the particular tax that you're talking about. If you're talking about sales tax is due in Pennsylvania every quarter. So it's due on the 20th of the month following the quarter. Therefore, January, February, March, April, May, June, July, August, September is the quarter that we're in right now. So it would become due on October 20th. Now, once you've been in business for a while, and depending on how much sales tax you collect over a period of time, Pennsylvania may send you a letter at the end of the month or at the end of the year and will may change you to either being a monthly sales tax submitter or even a semi-annual. So, and then they can flip you back and forth every year if they so desire. I've seen that happen. So sales tax could be monthly, quarterly, or semi-annual. Now, if you're talking about self-employment taxes, self-employment taxes is built right into your personal tax return for your business. So if you're a sole proprietorship or if you are an LLC sole proprietorship, like it's only you, then you fill out a business tax return, but it's a form that's right on your personal tax return. Also, if you're a partner with more than one owner, then that partnership tax return doesn't file any taxes. And so it flows over onto your personal tax return. Same thing with the S corporation. The S corporation, it files its own tax return, but it doesn't pay any taxes. It flows over onto your personal tax return. So, so at the end of the year, when you're filing your tax return, you're going to have your federal income tax, your state income tax, your local income tax. Like every individual has that, right? But then you have your self-employment taxes, what we also call Social Security and Medicare tax, that gets added into your federal tax return. And if you end up owing money at the end of the year, your accountant's going to say, hey, you need to send in X number of dollars to the IRS. And your accountant should also say, since you're owing this amount of money, let's spread it out over the year or throughout the year and make 4 quarterly estimated payments to the IRS. You may also have to do that to Pennsylvania and local as well, these quarterly payments. Now we call them quarterly, but they actually do not flow on a normal calendar quarterly. I think the first quarter is due in April, but then the next payment is due in June. And then the next payment is either September or October, and then the fourth payment is due in January, but it's still for the previous months, the previous year. Your accountant would give you the vouchers that would already be filled out. It would tell you what the due date is. It would tell you who to write the check out to, and how much to send in. So your accountant really should be handling this for you. If your accountant is not having you make estimated payments at this time, it could be because you're not owing in enough money to make it required to send those in. But it's a conversation worth having with your accountant for sure. Okay, let's see here. Next up, Jacqueline Potter. I'm going to go ahead and unmute you. And if you have the ability to unmute yourself, and if you have a question, feel free to ask your question. If not, I'll mute you here shortly. Okay, nothing right now. And let me see here. Okay, let me come over to the screen here then. I have an anonymous attendee that is asking a question. Says, what kind of special tax considerations do I need to consider when my product is a subscription to a web platform? Do I pay sales tax on the monthly subscription, etc.? Are there any resources that are available? Well, absolutely. Your local SBDC is available to you. We're always here to help you. A lot of times we can do research for you to try to find the answer for you, um, or we may refer you out to as someone that specializes in it. Like we work closely with the Pennsylvania Department of Revenue, so we actually have contacts within the revenue that we can hand out their phone numbers so that you can get a hold of them and ask them your questions and get direct answers from the revenue department. So specifically for you, you are selling a subscription to a web platform. I do believe there is sales tax on that here in Pennsylvania. So yes, you're going to have to pay sales tax on whatever the subscription basis is. You happen to say monthly. Sometimes you might give a discount if they pay for a whole year in advance, and um, uh, therefore you would pay the sales tax for that when you receive that payment. Okay. Um, are there any resources that are available? So I'm not sure when you jumped in here, but on that spreadsheet that I sent you, or that I can send to you, if you give me your email address, there was that button for that retailer's guide from the Department of Revenue, and that goes through in detail explaining what is taxable and what is not taxable. So if I am telling you wrong that there's no tax on these subscriptions, it'll be in that pamphlet there. But I do believe that I have some subscriptions, like canned software, if that's what you're talking about, for which there is sales tax on those things. Okay, next question right below it says, my accountant suggested not filing as an LLC, filing as an S corp, but wasn't clear on why. Is there any reason why I should or should not consider filing as an LLC, filing as an S corp? So that is a great question. There's a lot of possibilities that we could go in this direction for. Number one, okay, so it sounds like you're already an LLC, and you're probably an LLC filing as a sole proprietorship, or you're an LLC partnership, depending on the number of owners. So then the question is, should I decide to start filing myself as an S corporation? It depends on how much profit you're showing at the end of the year. You have to be showing the right amount of, not the right amount, but a decent amount of, um, let me think here, a decent amount of profit at the end of the year to be beneficial. Let me show you this table that I brought up before for other people. Let me see here. And let me go there. Now let me share this with you. Okay, so you should be seeing this PowerPoint. Yes. Okay. So I'm not sure if you've been in with me before or not when we've went over this, but I'll be glad to go over it again with everybody. So right now, if you're a sole proprietorship, or an LLC sole proprietorship, you're taxed like this. You have say sales at the end of the year of $100,000, and you have operating expenses of 50,000, and you're left over with $50,000 profit at the end of the year. Now, this is assuming you have not taken any money out of the business. Okay. It's just your operating expenses coming out of the business. On this profit at the end of the year, you have to pay the normal income taxes like you would for any other income that you receive. So that's your federal, state, and local income taxes. But down here in the bottom left, we talked a little bit ago about self-employment taxes. So self-employment taxes is the 15.3%. Now, if you're someone that also has a job working for another employer, like working for Walmart, everybody knows about Walmart, right? So if you work for Walmart, and you get a paycheck from them and you look at your pay stub, it's going to have Social Security and Medicare tax withheld. It's going to be half of that 15.3%. It's going to be 7.65 if you did the calculations. Walmart is paying the other half. So they're paying 7.65% as well, which they both together add up to the 15.3. Now, you, as your own business, you have to pay the whole amount, the whole 15.3%. You do get a deduction for half of that on your personal tax return. However, at the end of the day, you will literally cut a check for the total 15.3%. But remember, you got a deduction, but you still have to outlay the full amount. So this is how a sole proprietorship or LLC sole is taxed. Now we go to the S corporation. The S corporation has the same sales. This is your same business, has $100,000 worth. Oh, wait, let me back up. How do you pay yourself? Okay. So back here, you could take any amount of money out of this 50,000 as you so desire. It is your business, right? And so let's say you take out $40,000. You're not going to pay any additional taxes on it because you've already paid all of these taxes on the 50. So when you take out 40, you just take it out. There'll actually be less than 50 left over by the time you're done paying your taxes, right? Now let's go to the S corp. Same business, just taxed differently. You have your $100,000 in sales, $50,000 worth of expenses. Now, as an S corporation, you have to receive a paycheck. So, getting to your accountant now. Your accountant is saying, maybe not do this. The one reason could be why is because you're not making enough to take out a reasonable salary. Reasonable salary. What is that? In your mind, your idea of reasonable is different than my idea of reasonable and is different than the next person's idea of reasonable. Therefore, we would go to the Department of Labor's website and we would look up what somebody would earn in the career that you're currently in. And then because you're the owner, we have to add more to it. I always say we probably should add like at least $10,000 more to it, because you have to deal with all the administrative stuff that owners have to do. So this $35,000 is quite low. I'm sure it is low. Okay. But this is just an example. So let's assume that the reasonable salary for this position is $35,000. So on the $35,000, you still are going to have withheld from that your federal, state, and local income tax. Everybody always pays that, right? And then you have your self-employment and Social Security and Medicare tax right here. So you are down here, you're the officer. You will have 7.65% withheld from your paycheck, just like working for Walmart. And then your S corporation, your company, has to pay the other half of it. So then we come down here and your profit is $15,000. On this profit, the only taxes that you're going to pay on this profit is federal and state income tax. You will not pay self-employment tax, which is these taxes over here on the $15,000. You will not pay it, and you will not pay 1% local income tax. So all in all, on this profit that's left over, you will not be paying 16.3 because this is, whoops. This is added together as 15.3 plus 1% local. Now, if you're in Philadelphia or Allegheny County, then you have additional local taxes. And some other places, I guess, have additional local taxes as well. So, so that could be even higher. Okay, next. Assuming that you're taking a reasonable pay and then you're still left over with $15,000. Let's say in your mind that you think that you only need $5,000 in your bank account. So you want to take out $10,000 from this. This is a tax advantage. One, we already have this tax advantage down here in the bottom left-hand corner. The other tax advantage that we have is If you take out $10,000 from this 15 as what we call, and it says down here at the bottom, a distribution, if you take a distribution from your S corporation, you will not pay any additional taxes than what you've already paid on the 15, which is federal and state. So where is the tax savings? Meaning that you're not going to pay, even though you took out $10,000 for yourself to spend on your own personal life, you're not going to pay this 15.3%, nor are you going to pay that local tax. So the S Corp definitely has savings. And I see zero reason why you as an LLC could not file as an S corporation. There's like no overarching reason not to, other than what we just talked about. This is why your accountant might be telling you that right now at this time, it's not beneficial to do it. Right now at this time, you're not making enough money. And when I say make enough money, it's more or less like this bottom line. You might be making $1 million in sales, but if you have $980,000 in expenses, you're only left with $20,000. You're not going to see a benefit right here as an S corporation. So it's going to go off of your bottom line, what your bottom line is. I hope that helps. I think that's some good information. Not all, if you're just starting your business, it may be, I always tell people maybe like 3 to 5 years before your business has grown enough to take advantage of the S corporation. However, I know there are some people that just starting out, you're going to have high income, but basically no expenses because you're operating out of your house and you're offering some sort of like consulting service or something like that. And so an S corp could be beneficial right from the start. Okay, let me see here. Okay, I see Holly's saying here, sorry I didn't reply earlier. Zoom decided I should update it and I couldn't respond. No new questions this month. Okay. A lot of people come back here on a monthly basis just to listen because the questions are different each time. Sometimes there's duplication. Then it doesn't hear to listen to it again and just to learn from it. So Jacqueline Potter, I just unmuted you, so you should have the ability to unmute yourself. You might have a question in here that I'm not looking at yet. Okay, Jacqueline's not unmuting. So let me, and let me, okay. Let me go back to the chat then. I like to go back and forth is what I try to do. So Malik is asking, do you still have to file even if you're not gaining an income for the business? So if your business has no income and has no expenses, then as a sole proprietor or as a partnership or as an LLC sole or an LLC partnership, then no, you don't need to. I am pretty sure an S corporation has to though. So if you're an S corp and you have 0 and 0, you still have to file a tax return. But then if your business shows any income, it needs to file a tax return no matter what business structure you are. But let's say it has no income, but it still has expenses. Then, according to the law, you are supposed to file a tax return for that business, even if it has no income. Now, if you're in a position where you kind of just have this business that you really don't plan on making any sales, for years and years and years, but you just have a couple low hanging expenses every year, just small amounts, then I wouldn't worry about it. Okay. Because you have no intention, and that's what the IRS is looking for, is do you have an intention to own a business? Do you have an intention to make sales? Do you have an intention to make money? That's what they're looking for. And again, though, if you have like this stale business with a few low hanging expenses, then my question would be, why not just shut it down if you're not going to operate the business? Okay, I'm going to keep going here. Jamie, people are starting to type in here, so this is good. Okay. So Jamie's writing, we are a sticker company who is starting to do fundraisers with schools and or churches. We are wondering if in these situations, are the sales tax exempt? Yes. as long as they give you a tax exempt form. If they do not give you a tax exempt form, I know, you know it's a church, so you don't want to charge them sales tax because the law says I don't have to charge them sales tax. However, especially, I mean, schools, really all schools that I could think of should have filed with the government to be a school. Okay. But I guess you could have some types of really small schools that are just like operating, but they never filed with the government, I guess. But let's go to churches because this one's for sure. Churches, you might think that they're all nonprofits, and they do operate like that probably. But there are a lot of churches that have never filed with the IRS or with the state of Pennsylvania to be a nonprofit, and therefore they don't have that official nonprofit status. Therefore, anybody, and this goes for any of you that are selling taxable products for which somebody comes into you and says, don't charge me sales tax because, then your answer to that is provide me with a sales tax exemption form and I won't charge you sales tax. But otherwise, I have to charge you sales tax. Why do you do that? If you, the owner selling the product, if you get audited by the state of Pennsylvania for sales tax, if you do not have these sales tax exemption forms, then you become liable for the sales tax that should have been paid if you should have collected them. So I know I sorry, if you go to like Lowe's, everyone knows Lowe's. Um, you give them that sales tax form, they put it into their computer system, and then I think when you're checking out, it pops up on the computer or on the screen asking if this is a tax exempt purchase. Because sometimes it's not always a tax exempt purchase. So you either say yes or you say no. I also see that down at Sam's Club as well. So again, just make sure you get the form. Okay, next here. We are wondering if in these situations are they sales tax exempt? Okay, I said yes. Um, the schools will be getting the money from the parents, but we would get paid from the school itself. We are looking for clarity on when we need to collect tax and when they are tax exempt. Thank you. Yeah, so if you are being paid for by the school, then they should be able to provide you with a sales tax exempt form. Now that is me talking freely. Well, what I would suggest on that, if you want to, you're looking for a true answer, is you reach out to your local SBDC and you ask them if they can do this research for you. If they don't have anyone within their center, because again, there's 15 centers across the state of Pennsylvania, if they cannot answer that question within the center, then yes, you do have my email address. Feel free to reach out to me. But do know that I will be working with your local business consultant, at whatever center you happen to be in. So reach out to them first, and see if they can help you get that. And if they can't even get it, then I might even say, hey, let's get you connected to the Pennsylvania Department of Revenue themselves and ask them this question too, just to make sure. But normally, anytime you're sending money to the school, that you're writing it out to the school, then as long as they give you that tax exempt form, you're good. Okay, next question here, Mary. This is a bit of a long one. Let's see here. My business started in 2022. I completed spreadsheets for 23 and 24. My spreadsheet is very similar to yours. This past year, my normal job got a little too crazy and we shifted to QuickBooks. Okay. I feel like it's more cumbersome than my spreadsheet definitely is. However, my tax preparer just wrote me stating they will no longer complete my partnership returns. Is this common? Being relatively new in my business, I'm concerned for the last 2 years of my returns being filed incorrectly. Okay. Is this something SBDC will review, help ensure they were filed correctly based on the previous information I provided my preparer? I want to make sure nothing was missed and that I'm ready for a new person taking over. Also, can SBDC make suggestions for firms in my area? Okay, good questions. Good questions. This is wonderful. Okay, so so you got a note from your accountant that they'll no longer do your taxes. I'm not sure if that's because, because of your bookkeeping. it doesn't sound like that, something like that is. So one, let's talk about your bookkeeping spreadsheet. If you feel like you want to go back to your regular spreadsheet versus using QuickBooks, I mean, most definitely you can. I don't think QuickBooks has um, any type, I know they don't have any type of like contract. Now you might have paid for a year, so I mean, you're kind of stuck if you already paid for an entire year. But if you're just paying on a monthly basis, you can leave anytime you want to. And when you leave any of these paid softwares, whether it be QuickBooks or one of these other ones, you once you quit paying, you will still have access to the information that's in there, but you just can't use it anymore. You can't add to it. Okay. But you can see reports, you can see data, and most of the bookkeeping softwares, to my knowledge, allows you to continue looking at the data for 12 months. And then they just completely cut you off. They figure by that time you should be transitioned over. My suggestion, if you go to do that at some point, is just to make sure that you print stuff. As soon as you decide that you're going to start doing this, start printing the documents. And what I would do, I wouldn't print it to paper. That could take up a lot of paper. I would, if you can save and save it or print it to Adobe PDF, then save it on your computer and save it out there in the cloud using like OneDrive or Dropbox or iCloud. As long as you have those as PDFs and they're backed up somewhere, you'll have those as access for the future. Okay, so you're concerned about your previous tax returns. The SBDC is really not going to review all of that data that went into your tax return, and even oftentimes accountants are not able, like they can look at a tax return and see if they see anything glaring out at them, but they can't tell you it's exactly correct without spending, probably hours literally redoing the tax return to see, does the way they did it, does it match what the other accountant did. And every accountant may have a few little things here different, not that one doesn't know what they're doing over the other one. It's just the way that some of the different options are available within the tax law that allows accountants to use their human brain to make different decisions. But an accountant, if they see something glaring at them as they're redoing your tax return, then um, uh, then they would be talking to you about it. So, so if you feel it's done incorrectly, then you almost have to have another accountant do it for you. Most accountants will at least look at it, like just look at the papers and see if they see anything glaring. But if you want them to go in and actually redo it to see if they come up with the same thing, they're probably going to charge you for that, I would assume. Otherwise, you might just say, let bygones be bygones, hope that you don't get audited. And at least from the IRS, the chance of getting audited is like slim to none anymore. So, just kind of let bygones be bygones and move forward might be the better choice. Let's see here. And what part of your question was like, it'd be nice to have someone review it because you want to make sure nothing was missed. I mean, that is uh, a good thought to have. Again, you just have to decide if you're willing to pay for it. Partnership tax returns are um, not the cheapest tax return to do. So to have somebody literally do it all over again and dive into it, you're paying a good chunk of money. It just might not be worth it this year. To finish up your question here, you asked, do the SBDCs make suggestions for firms in your area? Absolutely. If you reach out to your local SBDC consultant, they should be familiar with accountants in your area, and they should be able to, give you like maybe a list of three or more accountants that they've had experience with over the years that they would send you to say, hey, go check them out. Okay. Okay. Next up, let's see here. Just 1 second. Okay. So another person is asking, what can make your business an abandoned LLC? Oh, it's been a while since I've heard that, but I've definitely heard it. I think an abandoned LLC is an LLC whereby you've not filed a tax return for years. So you haven't recorded any income, you haven't recorded any expenses, you just kind of like out of sight, out of mind kind of thing. So X number of years went by and the government considers it an abandoned LLC. And with that said, some things that have been changing in the state of Pennsylvania is this new registration that every business has to do on a yearly basis. And, or not every business, shouldn't say every business, but certain types of businesses, S corporations, I do believe the LLC has to do it as well. It's been a while since I've done one. Um, but I don't think sole proprietorships or partnerships have to, but I have to look into that. But anyhow, you have to file every year. And if you don't file every year, then after so many years, I forget the details on it now. I don't know if it's after 3 years or something, then they are going to close your business down. And um, so you want to make sure that if you are in operation, you want to check into the uh, let me see if I can find it real quick here. Boy, I'm just not getting it here. Oh, the annual report, Pennsylvania's annual report. So you want to look into the PA annual report filing requirements to see whether your business needs to do that or not. And I'm going to put that into the chat here. So do a search on the internet for that, and you'll be able to find some good reading about it. If you do have further questions, though, your SBDC consultant can help you out with it. You know, again, like myself, I'm drawing a blank at this moment on it, but I could quickly look online and refresh my memory. Like, oh yeah, yeah, I knew that. Okay, let's move on here. So this question is here, talking about the sales tax exemption forms. So do you keep them in your files and provide them? So we keep the tax exempt forms in our files and then provide them at tax time. So actually, no. Yes, you keep it in your files when somebody gives it to you. Keep it in your files, but you do not ever have to supply it to anybody unless you're audited. So somebody gives you a sales tax exemption form, put it in the computer, scan it in, save it in the computer, or put it in a filing drawer. Just let it sit there. And then if you ever get audited, you have it. Now, they do suggest that you have them updated on a regular basis. So maybe a good habit would be once a year that you have your clients or customers give you a new exemption form. The reason being is because something could have changed in their business and maybe they're not exempt anymore. So when you reach out to them and say, "Hey, I'd like to get an updated exemption form from you," they may say, "Oh, we're no longer sales tax exempt." And they're like, "Okay, just throw that away and be done with it." However, maybe another business, they've changed what they sell. Maybe they used to sell non-taxable products or products that from you would be non-taxable, but now they're selling different. So things like that can change, and that's what Pennsylvania tells you. Get a new one on a regular basis. It just saves you from getting in trouble in the future. Are there tax breaks for internet electric bills if office is in the home? Absolutely. There's that home office deduction. So that's part of that spreadsheet that I showed you if you were there here with us. Um, if you have a home office that you operate your business out of, you can take a percentage of your electric and water, sewage, gas, um, garbage, internet, things like that, as well as your real estate taxes and your homeowner's insurance. You can take a percentage of that. So that is something to dive deeper into sometime. I know we've talked about that, I believe, in one of our tax talks before in more detail. And I'm not saying, you know, maybe we will someday again in the future. But also reach out to your local SBDC consultant and see if they can fill you in on some of those blanks as well. Are there taxes on grants we may be awarded in the future? Some grants are taxable, absolutely. What happens is you get a 1099 miscellaneous at the end of the year, and you have to file that as income on your tax return. Now, some grants are not considered. Um, earned income, so you may not have to pay self-employment taxes on it. But that's where your accountant will come into play to help you decide whether it is a grant considered earned income or whether it's a grant considered what we would call passive income, not earned income, because it will be taxed differently. And then some grants are just completely not taxable at all. Can you change your filing status from partnership to S corporation? Absolutely. With that said, though, there are some caveats to that, as in there could be some tax implications because you literally have to shut down the partnership to open up the S corp. So if the partnership owns some assets and you need to transition that asset from a sole um, uh, transfer that asset from the partnership over to that S corp, there could be some capital gains involved, is what I was trying to think of, and so you may have to pay some taxes. Working with an accountant closely on that would be huge to make sure that you're doing it right. Now, with that said, I don't have a problem saying reach out to your SBDC consultant first and see if they can give you some insight on it because it would be offered to you at no charge, right? And then when you would go to talk to your accountant, you already have some insight going in. Good question. Okay, John, and as I saw you saw your question over here and you just copy and paste it there. So definitely I'm going to get to it right now. Um, can an established LLC decide each tax filing year whether to file an LLC or S corp? No, not each year. The last I checked on this, it's every 60 months. So once you choose to be taxed like an S corporation, you have to stay that way for 60 months, 5 years, and then you can transition back to being taxed like a sole proprietorship or partnership, depending on how many owners there are. However, to be frank, in all my years, I've never seen someone flip flop back and forth. I've seen them go from an LLC sole or an LLC partnership to an LLC S corp, but I've never seen them go backwards. I can think of one person many ages ago that thought about doing it, but it wasn't advantageous for them when they didn't do it. So I've never seen anyone literally do it. Is there any federal limitations or suggested limitations? And does the S corp filing status impact my personal Pennsylvania personal return, or do I need to file a new type of business, PA S corp business, or is that just for federal purposes? Okay, good. Okay, so the limitations, as I mentioned, 60 months. Does it impact your personal tax return? Absolutely. So it's just like with the federal. If you're doing an LLC sole or an LLC partnership, well, go with the LLC sole first, right? Uh, you're going to fill out a Schedule C, which goes on to your federal personal, state personal, local personal. As for an LLC partnership, because you have more than one owner, you have to file a partnership tax return. That partnership tax return um, uh, files its own tax return, and then it spits out what we call these K1 forms. Same thing with the S corporation, exactly the same thing. Files its own tax return, spits out these form K1s. If there's only one owner to this S corporation, then it only spits out one K1. But if there's multiple owners to the S corporation, it spits out multiple K1s. Those K1 forms go onto your personal federal and your personal state tax return. It also goes onto with your personal local return, but you don't pay any taxes on S corps, as I mentioned in that PowerPoint I showed you a while ago. You don't pay any local taxes on it, but you still send the K1 in with it. What is the K1? So if there's just one owner, then all of the profit from the business or all of the loss from the business shows up on this information form, this K1 form that just gets typed into your personal tax return. If there's multiple owners, then it gets split up but by percentage of ownership. So let's just say it's 50-50 ownerships and you're showing a $50,000 profit at the end of the year, then you're going to have two K1s, one for each owner, 25,000 and 25,000. That goes on to their personal tax returns. And ultimately you're going to pay income on that. Uh, according to that table that I showed it, so that means you're going to pay federal and state income taxes on that profit from the S corp. You're just not going to pay Social Security, Medicare, and local taxes. Okay, so I think I answered your questions there. Good. Okay, well, it looks like we are out of time, everyone. I hope that I got all of your questions answered today. We will be back here next month, and I do believe I was looking at next month, we are talking about loans and grants, I believe. So if you want to, hear some tax tips that I have to share with you about loans and grants, then be sure to come back here next month and come back every month thereafter. We've been doing this for quite some time. As you see, you get to ask your questions. It seemed like everybody was really using chat and Q&A, so I just kind of kept flowing with that. Other times the chat and the Q&A is quiet, so I try to get you all to unmute yourself and talk to me. But this was a great conversation. I hope that you learned something, and we'll see you back here next month. Take care. Bye-bye.